a security by default. And because it looks like XRP might get a pass and be one of the grandfathered in, including Cardano, in this whole process, I guess we just have to pass a horrific trash bill that makes everything a security by default, and it creates attack vectors through bureaucratic nonsense for the SEC to destroy all future American cryptocurrency projects. And also, there's nothing in this for DeFi. Nothing. Uniswap doesn't get anything. Prediction markets don't get anything. Armstrong can't even get his yield-bearing stablecoins. This is not a good bill.
Good morning, everybody. Hello and welcome back to another episode of your favorite crypto news related channel. And you guys saw the thumbnail. Today is going to be an exciting episode because we got Mikkel joining us to hopefully agree with me that Charles Hoskinson is getting this one wrong. But before we start talking about that, guys, I want to kick it over to Mikkel to get an introduction. Now, first of all, this week has been insane, not just from a crypto prices standpoint, the Iran situation, the Japan situation, we've got US dollar updates, and of course, we've got the Clarity Act. We're going to be talking about all of these topics all throughout today's episode. I also just want to spend some time going through some altcoin price charts, the ones that you guys care about. So if we can, we're going to get into that towards the back end of the show. But Mikkel, with everything playing out before our very eyes, how are you feeling this morning? What's on the forefront of your mind?
Well, it's always a pleasure to be on. We've got some definite chaos going on in the market right now, but as much as this is not fun for your average investor, these are always the places people look back at as tremendous opportunity. So unfortunately, normally tremendous opportunity when it comes to investing doesn't necessarily coincide with great feeling. But typically it's times like this where there's actually a ton of money to be made. So super exciting time. Lock in, put your head in that mindset. And I think it gets through these time periods a lot quicker. And then we'll come to the other side of this and everyone will be saying, wow, I can't believe I had this final opportunity to get X, Y, and Z. So a lot of chaos, a lot of opportunity. Looking forward to getting into it.
And I think the best place to start, guys, is with the Clarity Act, because Charles Hoskinson is now coming out and saying that this is a horrible bill. It's not a bad bill. It is a horrible bill, according to Charles Hoskinson. And I think the reality of the situation is, Mikkel, is that if we could get a perfect bill, we would. And I put out an update yesterday in regards to Charles on my Twitter account. David Schwartz actually responded to the tweet underneath the video where Charles said that Brad Garlinghouse is completely getting this wrong. So for our listeners who don't have the context, I'm going to play about 15 seconds of this clip from yesterday, and then we're going to show you what David Schwartz's response was to Charles Hoskinson, because this goes to show that Charles, where was he during the actual war on crypto? Here it is.
And you're a security by default. You have to go beg, borrow, plead, and steal to get your way out of the security side. It's not a sustainable or good model. And then you got guys like Brad Garlinghouse come by like, well, you know, we just got to have no bad bill instead of just no bill. No, you climbed up the ladder and you pulled the ladder up so no one else can climb up with you. That's not good regulation. That's the same oligarchy and nepotism that we all complained about with the banks. And because you're on the other side of the table, now it's good for you. So fuck all of us in the industry and, you know, all the small guys. We can't have a system where you start as a security by default. You'll never get liquidity. You'll never get listing. You'll never accumulate a user base. You can't fundraise. It just is a non-starter unless you're going to change securities law. But nobody wanted to change securities law. Then the other thing they did is they didn't want to change securities law. So you know what they did? They made the CFTC the new SEC.
So, Mikkel, for the sake of this conversation, I do just want to point out something. So it's very ironic, from my opinion, and there's a great Elon Musk quote where he says, the most ironic outcome is oftentimes the most likely. How funny is it that people like the digital asset investor, yourself, Coach JV, all these different influencers, they were talking about the war on crypto the entire time it was going on. But more importantly, they were talking about the Ethereum free pass. And now we're just a couple of months away from, if you listen to Charles Hoskinson, the Clarity Act ushering in the XRP free pass. So how the turntables have turned here in 2026, guys. Mikkel, I want to kick it to you for some broader thoughts, and then we'll break it down.
Yeah, so I think the first thing that's like really important to realize here is like, we're not just magically at this time period right now where like the vast majority of large blue cap cryptocurrencies will not be considered a security. The whole reason why this is case law is because Ripple fought a 4.5-year-long battle for the industry against the SEC to create the case law we're at right now. I'm not sure how Charles thinks that this was formulated. He's coming from the perspective like Brad Garlinghouse is writing the bill, but this is in a bill being put forward by the administration And then the banks and the cryptocurrency industry are forced to get together and agree on certain points. I have been saying forever, there are going to be a ton of things that we don't necessarily like or aren't perfect about the bill. In my perspective, it really doesn't matter, especially when it comes down to where we are right now in the industry. All we want is a framework to foster adoption and get innovation going here in the United States. I don't think this bill in any way is a horrible bill. I think this bill probably has some challenges, makes things a little bit more difficult for smaller cryptocurrencies. Maybe in certain aspects, there are things that even people don't like in terms of yield on stablecoins and stuff like that. But if this technology is as powerful as we all think it is, none of this is going to matter. When the internet first got rolled out, you probably could have pointed to a whole bunch of different things that people didn't like about the Telecom Act. Did it end up mattering? Do people still look back at that today and say, this is what destroyed my company? No, companies are either powerful enough, big enough, had enough actual innovation going on where they innovated around these different rules. So look, there's going to be things certain people don't like. In my opinion, we just have to look past it. I would rather see a bill get put out now, prior to midterms, prior to a potential new administration 4 years from now. I don't think the bill gets any better from where we're currently looking at it. I think right now we're kind of in a sweet spot. I think you get it across the finish line. And if there's great innovation, if there's a great product, it will find a way to immerse itself in society. I don't think we have to sit here and pretend like something someone writes in a bill today is going to completely destroy the industry.
Totally agree. And Johnny, you joined at the perfect time for several reasons, but because David Schwartz put out a response to my tweet yesterday that we're going to read through live on air. Now, guys, we do have nearly 2,000 live listeners. We got Mikkel joining us today. Is a very special episode here on Good Evening Crypto. If you're enjoying this content, smash that like button. Be sure to share some of your thoughts in the live chat so we can incorporate them into the conversation. And this is what Seven Dennis had to say. Let's not forget how Charles Hoskinson, backstabbed Ripple. I won't forget. Me and Charles, actually, the first time we ever spoke on Twitter, we butted heads back in 2023 and he called me an idiot, right? So I'll never forget it. Don't forget, right? So when Charles comes on this show, eventually I'll be sure to ask him that question because I will pull up those tweets, which is pretty funny. But Johnny, on a more serious note, what we're talking about this morning is that Charles is coming out very strongly against the Clarity Act. Here's 15 seconds that you need to see.
Security by default. And because it looks like XRP might get a pass and be one of the grandfathered in, including Cardano, in this whole process, I guess we just have to pass a horrific trash bill that makes everything a security by default, and it creates attack vectors through bureaucratic nonsense for the SEC to destroy all future American cryptocurrency projects.
So, Johnny, that's the important part of the clip. But here's what David Schwartz responded with, and I think our listeners are going to appreciate this. David commented underneath this post. So I posted that video of Charles Hoskinson being critical yesterday. Vet responded, climbing up the ladder is an unfair description of being targeted by the SEC and having to fight for survival. I completely agree with that. Here's what David Schwartz had to say as well. Ripple had a lot of opportunities where you could have advocated only for ourselves to the detriment of those who would follow up. We absolutely try as hard as possible to not do that. I don't think we have ever done that, but I also think that we would do that if we had to. We were at least a little bit selfish, but it's totally fair for people who think we have done that or are trying to do that and hold us accountable. So like a little bit of word salad there, but the important part is at the bottom. I think we also have some selfish desire to see our competitors succeed. I know that sounds strange, but it's because it's so early that it makes sense. Today, it seems possible, but in the early days, the idea that Google could succeed without a dozen other internet companies being successful, that seemed absurd. Competitors build up the market, they build legitimacy, and they make the entire space appealing to enterprises and consumers. Personally, according to David Schwartz, I do think a suboptimal bill is better than no bill at all. That's exactly what Mikkel just said a moment ago, but it also makes sense to fight for the best bill that we think we can get. Johnny, I'm going to kick it to you because we're going to go back to Mikkel here, but I think that's a perfect response. How are you feeling, and what do you think about David?
I'm feeling great. Good morning to all the crypto maniacs out there. We love and appreciate you guys. I'm excited. I haven't seen Mikkel in a while. Holy shit, bro. It's great to see you back here. Glad to have you on the show. You know, I caught the tail end of what you were saying, and literally it was almost like we were two peas in the pod. I couldn't agree more. I literally had the same exact take yesterday, right? You know how I feel, Abs. There is no question in my mind that a half-ass shitty bill is way better than no bill at all. This is just a complete, absolute 100% no-brainer. Charles is wrong. I get it. You know, Charles wants the best of it. First of all, that was never going to happen. There is too much at stake. in this industry that the banks are going to let some other industry take their lifeline away from it. It's not going to happen. It's just not going to happen. Anybody who thought that was retarded. It's just not going to happen. So the reality is, what's going to happen is we're going to get a crappy yes bill, but it ain't a half-ass bill. But it ain't going to matter because it's going to help move the industry forward in the long run, and that's what matters right now. This industry is stuck, but now it's really going to be at the mercy of who's at the top. Now, we saw when you had Biden in there and his administration, we saw what happened to this industry. They crushed the shit out of it, right? So we absolutely need something in writing, documented, done, that cannot be changed, that then will carry this industry forward. And like Mikkel said, nobody's going to give a shit, a rat's ass, what it said, you know, and talk about 1996 once the industry came here. The point is, you and I wouldn't even be talking right now if it wasn't for that bill in 96, no matter how good or bad it was then, too. It wasn't perfect, but it enabled the innovation to happen, and that's what we need. So I don't care what Charles says. I don't care what anybody else says. I want to see a bill. I want to see it done this quarter, because if we don't, like I said, statistically, he's probably going to lose the midterms, and then who knows what. Now we're at the mercy. And this could go 2, 3, 4 years, depending on the next president who comes in and what his thinking is. And bottom line is, it's going to be whoever his lobbyists are and what they want to happen. So you all better pray that these guys get their shit together and get this bill passed right now.
Totally agree. And Mikkel, I do want to spend some time on what's happening in Iran and the Japan situation. We're going to talk about the domino theory during today's episode, guys. If you're enjoying this content, smash that like button. Here's one more article in regards to the Clarity Act. This is Patrick Witt confirming the Clarity Act is moving forward. Here's exactly what he had to say earlier this morning.
So the latest is it's passed out of the Senate Ag Committee, the portion dealing with CFTC. We are actively working to get it back on the books for a markup in the Senate Banking Committee. The main issue that's been the sticking point is the stablecoin rewards and yield coming back up in the context of the digital asset service providers, the intermediaries, potentially being able to offer rewards and yield on stablecoins to their customers. We at the White House have convened a number of meetings over the past month to try and solve this issue and broker a compromise here. Crypto, to their credit, has made considerable strides in coming to a compromise position. It's time for the banks to reciprocate and ultimately strike a deal on this, because this is the issue that we believe is the domino that will fall, and then ultimately everything will fall into place after that.
Well, it's ironic that he just said domino will fall. But Mikkel, one of the things that's really clear to me is that the Clarity Act was something that was supposed to be done last August originally. I know a lot of people have forgotten about these headlines, but when the Genius Act was initially passed, there was this idea that the Clarity Act was going to quickly follow. Here we are 6, 7, 8 months later, and it's going to be another 30 to 60 days before we get this across the finish line. So I want to put Charles Hoskinson opinion to the sideline and just hear more broadly from you. What are you thinking about the Clarity Act? First of all, are you excited about the idea that we're finally going to have digital asset regulation? And the second part of that question is, the Clarity Act, from my perspective, is important for 2 reasons. One, major speculation on which digital assets will be most successful. So now that the industry has the idea, crypto's here to stay. More broadly, they know which of these assets is going to be most successful. That's where I really think XRP, Hedera, Chainlink, some of these real world blockchains come into play. The second portion of that question is that we're now seeing companies like JP Morgan and BlackRock and some other main Wall Street companies advocate for the passing of the Clarity Act. The only reason they would be doing that is because they can profit and expand their business model. So this goes to show that this narrative here with the Clarity Act is twofold. It's going to bring in speculators, and it's also going to bring in real businesses, even the likes of JP Morgan. What are some of your thoughts on the matter?
I think the most important thing is just to understand that we as the public, right, we're a negotiating chip in this entire thing. It's not the fact that, oh, everything that we're hearing publicly, either from the banking lobby or for the crypto lobby, is really even the discussions happening behind the scenes. I mean, part of getting a position across the finish line here is to use public emotion and use us as pieces in order to pressure certain sides. So the truth is a lot of people, right, are trying to analyze, oh, where does this stand at this current moment? What are they saying? What are they putting out there? There's reasons why specific pieces of information are being leaked to the public and why other pieces of information are not being leaked to the public. I'll say this. The fact that they're even going and stepping into the room and talking about this bill at an extremely high level shows exactly why this industry is coming to that place of actual institutional ready adoption. They would not be, like you said, talking about this stuff, spending the time and effort to put these things across the finish line if there wasn't a large desire for this industry to really start taking its place as the base layer for the financial system we're heading into. I think at my view of this entire thing, this stablecoin yield thing is a big nothing burger. I mean, I personally could care less as a consumer if I have to go get my yield from a bank versus getting it from Coinbase. Like, it makes no difference to me. Ripple's a bank now. Circle's a bank now. I could probably just get yield directly from them. I mean, if you're a cryptocurrency company, go become a bank and then you can offer yield. Like, whatever this, in my opinion, small road bump is, it's kind of that last piece where both parties are throwing their final jabs and punches before something gets over the finish line. I think there was the timeline before. I think both sides are probably seeing a real timeline coming up for when they have to get something across the finish line. And until then, right, they'll probably just keep trying to take as much as they can possibly take. I think over the long run, I think unfortunately for the cryptocurrency industry, I think the current price action is probably going in the favor of the banks. I think this probably puts a little bit more urgency and impotence on the cryptocurrency industry to make a deal with the banking lobby. I think the funniest part about this entire thing from my perspective is if you're looking at actually legislation being created by the government, who cares what the banking lobby thinks? Who cares what the crypto lobby thinks? Just produce legislation and rules that you think is going to be the most beneficial to the industry and the American people. I think the kind of funny thing is it's like these two people who don't represent the American people fighting about what this bill is supposed to look like. That's the comical part about this entire thing. But I think the thing that is a outstanding positive is both of these parties clearly want something over the finish line. That's why the negotiation is even happening in the first place. And they will put something across. And I don't think either side of this, yield or no yield for cryptocurrency companies, is going to really be an outstanding negative for users. I think there's going to be a million ways around this. Cryptocurrency companies becoming banks, banks offering cryptocurrency products, and then boom, suddenly we have the rules, the framework for all of this stuff to actually get created with legitimacy, which is the more important piece out of all of this.
Mikkel, you make a really good point, because what we've heard from crypto exchanges is that if we're unable to offer a stablecoin yield in the US, people are just going to take that money and put it in exchanges offshore. But there's this other narrative, right, where we're just going to find that yield in the banks. So I want to hear really quickly, what is your opinion on that? Do you think there'll be this big flight of liquidity if they don't get stablecoin yield for crypto exchanges? Or is that something that they're using as a point of leverage?
Well, there's already cryptocurrency banks. I mean, you can look at someone like Anchorage Digital. Like, they are already an OCC regulated banking institution. Like, there's going to be firms that bridge the gap. I think to a certain level, from the banking perspective, is the banks are sitting there saying, and like, not to take the side of that, but like, we have to comply with all these rules and regulations for how we structure products. Why do we even need to be a bank? If we can go structure all the same products as a cryptocurrency company, why are we dealing with this regulation, right? So either those cryptocurrency exchanges, they have to meet a higher level of regulatory purview, or if there has to be some kind of disintermediation between the two business lines. It's kind of just a weird artificial construct, which is a problem of financial regulation. It holds back a whole bunch of innovation, trust me. But you get to the point where, is that regulation doing something useful? It's a completely different argument. But the truth is the banks have to abide by something. If the cryptocurrency industry can just recreate all the same products that the banks are already doing, well, then what's the point of even abiding by the banking regulation in the first place? So if these cryptocurrency companies want to offer products, and some of them have made the concession that they do, and they will meet that higher level of regulation, like an Anchorage Digital, they'll go become a bank. But to have the best of both worlds, to say, I don't want any of the regulation to be a bank, but I want to have all the powers that a bank can have, to me, that's like one of those places where that might be certain players in the industry that are really just trying to grab as much land as possible, when in all reality, there's actually playbooks in place for these cryptocurrency companies to become banks anyway.
Well, Johnny Crypto, I'm going to kick it to you really quickly for this question. Now, somebody said abs looks like the Zohan. Well, the second part of that statement, guys, is you don't mess with the Zohan. So if you're enjoying that content, smash the like. Let us know your thoughts in chat so I can pull them up on screen. And Johnny, this is a great thought out of Joseph Ray here. Thank you for the $4.99 and the membership. He said, we have some leverage now. If we accept a half-ass bill today, wouldn't we lose that leverage? Johnny, floor is yours, and feel free to respond to that.
No, we don't have leverage. The banks don't lose here. The banks right now would be very happy if crypto went away and they continue going along, making their $7 trillion. They don't care, right? At the end of the day. So no, don't think like we have leverage. No, we're fortunate that we have a crypto administration and a blockchain technology that people do see a cheaper, better solution, and they can help, and they want to tokenize the world. But to say we have leverage, no, they'll drag this thing out for another 5 years if they don't get what they want. And the reality is, this is really, like Mikkel was saying, this is Coinbase just saying, hey, I want the best of both worlds. I want my cake and I want to eat it too. I want to be offered 5% to people, and I don't want to have to follow the rules. The reality is that's just not going to happen. They're going to have to bite the bullet on that, because literally for that one reason, the whole industry is going to be frozen right now. That's a big, big price to pay so that a couple exchanges can offer 5%. And the reality is, I'm a little bit surprised that the banks really think it's going to hurt them, because most mom and pops, they aren't going to go for that anyway. They're going to end up going to the bank because it's conventional, it's safe. But I think at the end of the day, Abs, we are going to see the banks will get the better end of this story. But Joseph, yeah, we do not have the leverage. The big players do. So if we can get a half-ass bill, trust me, you want that. We take it. 2 years from now, we aren't going to give a flying crap what's in the bill, what it looks like, because all your accounts are going to be so goddamn high. You better have an exit plan. You better make sure you take profits. That's what you should be doing, and do it through a Roth IRA so you get to keep your profits. That's really what you should be thinking about. Don't worry about whether or not, we get it's got to be the best bill. That's where Charles, I'm really surprised, Abs, and I got to run, but I'm really surprised in Charles. He's a very smart guy. He should know better that you're better off getting something and let the industry move forward versus he's worried about, certain ones are going to get crippled. He's not wrong. It is going to cripple it, right, if everything becomes a security. But the reality is, it's just that's how the world works. You're going to have to find a happy medium. Listen, I was in politics. We never got the bill we wanted. Neither side did. It always was one side was doing this, one side was doing that. Neither side was happy, and that's the bill that always passes. The bill that neither side is happy, and that's what we're going to get here. But with that said, my friends, I need to go. Wishing you guys a great day. Mikkel, great to see you again, brother. Don't reach out soon this summer. Let's go get some pizza in New Haven. Abs, I'll see you tomorrow.
We'll see you tomorrow, Johnny Crypto. Big thank you, of course, for jumping in. Mikkel,
I think a funny thing, just to back off that real quick, is imagine what happens if we move through all of this and then treasury rates drop and there's rate cuts and then there's no yield on the stable coins.
No yield.
Everyone's betting about the yield on the stable coins, and then treasuries are yielding 1% and no one wants to hold the money in a stable coin.
Right.
I mean, personally, I think we are going to have massive rate cuts going over the next 4 to 5 years. So that would be the funniest thing about all of this, and kind of what I was talking about when I say in the long run, does any of this matter? The firms that want to be compliant, go become a bank. If offering a treasury yield is that important and you're going to risk this bill not passing, you better hope treasury rates are going to stay up, or this is going to be pretty pointless.
You know what? That's an excellent freaking point. At the end of the day, 5% could be 3%, 2%, 1%, and then we just held up the whole industry for nothing.
Oh my God. Imagine if Trump got what he wanted and we had negative interest rates. Then you guys could all go to Coinbase to pay Coinbase for holding your stable coins.
Exactly.
It's just so much uncertainty all on one product. It's like, who cares? Just pass the bill. Just figure this stuff out later.
Pass the damn bill.
Johnny Crypto, last question here, because they sent the live dono. They said, P.S. Uncle Johnny, have you been working out? So on your way out, answer that question, and we love and appreciate you.
Absolutely. Every single day, my friends, 10 push-ups. Now I'm up to 50. Oh, no, 10 squats as well. Abs, I'm done. I lost 35 pounds. I'm happier than hell. I still got another 20 to go. But it's all about, remember this, guys, at the end of the day, health is wealth. If you don't have that, you have nothing.
Absolutely. Johnny Crypto, we're dropping the fitness plan at a $5 XRP, so you guys have to stick around for that one. But big thank you to Johnny, of course. Mikkel, I do want to talk about Iran, oil, Japan. Just really quickly, I want to address the XRP price chart, because at the beginning of the episode, you said something so important. Moments like this, in retrospect, are looked back upon as huge opportunities. This is a price chart that caught my attention, put out by Crypto Insight UK yesterday. He said the last time and the only time that XRP's price chart has ever been this oversold on the weekly time frame was the bear market lows of 2022. Now, I did a breakdown as well, kind of talking about what we're seeing on other charts like the XRP versus Bitcoin pairing, things of that nature yesterday. But what our listeners understand is that we're oversold. The XRP asset is undervalued. 8 months ago at this point in July, this was an asset that was $3.66. Now we're trading sub 140, right around $1.41 today. The point is the same. That massive bear market regression that people were waiting for, people like Blockchain Backer were calling for, we got it. And now a lot of those bears, they're looking for capitulation. They're trying to identify a bottom and figure out, when can I start to re-enter these projects? That's what I wanted to focus on from your perspective as well. So what's your read on current market sentiment, and where are we in the XRP price chart according to your analysis?
Yeah, well, I think a lot of what we're seeing right now has been front run by the crypto industry. I mean, XRP, right? Any given day, we're kind of chopping at the current level we're at right now. But the stock market's getting hit pretty hard today. And normally what you see is a cryptocurrency market selling off harder. We're kind of holding where we've been. We've had a couple green days mixed in, had a couple red days mixed in. It's causing us just to trade sideways. The rest of the stock market took a huge whack today. We have the VIX up at a 24. These are all things that cause a lot of volatility, but it seems like the cryptocurrency industry, for large part, has front run the move we're seeing right now. I think what the administration did was really forecast a lot of the things we're seeing right now in terms of the move into Iran. And I think the cryptocurrency market, because of how liquid it is, how quickly things move, Brent ran a lot of what we're seeing right now. And now we're dealing with the repercussions that I think were largely forecasted. And some people, I think, even forecasted overly negative in terms of what we would have seen. We haven't seen a lot of involvement from other superpowers taking the other side of what the United States has been doing. That kind of puts to bed a lot of those World War III narratives that you always hear popping up, in which things could really, really escalate. But right now, we haven't necessarily seen that. And I think the market is essentially saying, okay, this is about on par for what we've priced in, right? This is about what we expected in terms of what the market was going to do and what has already been priced in. I think the advantage to this is it's kind of like ripping a Band-Aid off. Since I've been an investor, you have heard issues, potential complications because of Iran. If we actually come out of this with the Band-Aid ripped off and it's not something we have to worry about every single year and talk about these things, there could be positives on the other side of this as well. So there's a lot of uncertainty going on, but I think the interesting thing is despite this escalation we've seen in the Middle East, we haven't seen a big progressive ramp down in prices across the board in crypto. I think the crypto industry was quick to identify some of these uncertainties. We priced in a lot of it forward looking, and thus far things haven't necessarily been as negative as a lot of people initially anticipated.
It's a really interesting time, guys, because for a long time, and Mikkel, you'll remember this, 2023, 2024, the sentiment, it wasn't even as negative as it is right now when you think about the regular retail investor, but prices were 20% of what they are. Like, I was looking back at the XRP price chart, even in mid to late 2024, this was an asset that was trading at 48 cents. So even now, during these bear market times, the XRP community has been massively vindicated by the fact that even while Bitcoin and all these other assets are crashing, it wasn't that long ago when Bitcoin was trading at $70,000 and XRP was trading at 45 cents. Now the market has grown and evolved to a point where Bitcoin's trading at $65,000 and XRP is trading at $1.40. So we have seen organic, real growth. We have seen sustained value for the XRP community. And I wanted to talk about that, but I see that we're coming up on the 30-minute mark, guys. I'm going to get into the Iran content that I wanted to share with Mikkel. Now, we played this great video. I'm pretty sure I watch all your videos. I'm pretty sure you played something similar or maybe even the same video, so I won't play it again. But if Iran collapses, oil becomes a global story. And we've been covering this because of Jake's outline of the domino theory. Before I get into any of my specific questions, I'd love to hear your overall analysis on what we've witnessed out of Iran so far. We now know that the Strait of Hormuz is effectively closed, and you broke this down very well for me before stream, so feel free to do that again. But nothing is passing through the Strait of Hormuz because insurance policies they're not willing to back the ships for the time being. I'd love to hear your thoughts, and then we'll get into the XRP portion of this.
Yeah, there's a lot of debate on whether the Strait is closed or not. And you have to understand from a geopolitical standpoint, Iran really doesn't have, at least with the current fire they're under right now, they're not going to put a whole bunch of ships in the middle of the strait, right, and have them sitting ducks just to be blown up. That's never going to happen, right? So they have to, by default, close the strait one way or the other. The easiest way to do that is just to add a whole bunch of uncertainty to go through the strait, right? If you do a couple attacks here or there, no one's going to take the risk of going through the strait. And essentially all the insurance carriers and providers for those ships are just going to say, you know, if the chance of a ship getting shot before was, let's say, 2 or 3%, right, we might be willing to underwrite that risk. Right now, maybe it's at 50 to 60%. They're just yanking insurance. It's unprecedented. They're just pulling insurance right off the ships. And now the ships are sitting there where it's not actually closed, right? They could go through the strait, but I mean, are they going to? Obviously not if there's no insurance on the ship. So they've been able to close the strait essentially. Now, I think the part of this that's extremely interesting were some of the moves made by the administration prior to this to kind of counteract some of the impacts this would have. Things like what we saw in Venezuela in terms of getting access to another supply outside of Iran. I even remember as soon as the United States took over Venezuela's oil supply, a lot of people were saying, there, boom, right there, we're going into Iran. That was that moment because it was a huge thing that you would do prior to secure a large supply of oil. I think oil is going to have a spike associated with it. I don't think it's possible to have this much uncertainty. I think the problem on the other side for the United States economy, at least, is how much does this impact inflation? What are the downstream effects of having this higher oil price? Oil goes into everything. It's going to have a huge impact on the overall global financial system in terms of the cost of production everywhere. We're seeing a lot of extreme measures right now from different countries in the UAE to counteract what we're seeing. They're ramping up production, and OPEC Plus, that could counteract some of them. But in terms of how quickly and how fast we're able to respond to this and how much the production scales, that's what's yet to be seen. And so far, we're already seeing impacts, obviously, from the situation on oil, and that's going to have downstream effects for things like inflation.
Well, here's something really interesting, guys, because we're going to talk about the Jay Claver narrative of this whole thing. I actually have a friend who said he met with KKR's head of Japan's private equity. They're talking about possibly raising rates, but they aren't anticipating anything over 1.5%. I said he hopes ... And that's kind of what I wanted to get into with you, Mikkel, right? Of course, they're not going to, and that's more fun that I'm sharing that insight. But I think Jake has had this massive victory lap over the last 48, 72 hours or so, because all of these dominoes that he's been predicting are starting to fall. We got the Iran situation. We got the Strait of Hormuz getting closed. Now what we're willing to see, is there a spike in oil? And does Japan respond by raising interest rates? Now, I did a video over the weekend kind of outlining Jake's theory by playing some of his own videos and just expanding on kind of what he had said and making it really simple to understand. Japan needs to raise rates in order to save the yen. And so that's where this whole narrative starts to impact XRP. And I have a really interesting update in regards to Japan that we'll get into kind of after this conversation. But the whole point in what Jake has been outlining is that they need a global liquidity asset in order to facilitate this liquidity shock and kind of prevent the cascading effects throughout global finance. What's your overall take on what you've seen and heard, not just from Jake, but from your own opinion? And are these the things that we've been waiting for? Are you anticipating we'll see a spike in oil? Are you anticipating that Japan will respond with an interest rate cut? What are some of your opinions on this matter?
Yeah, no, I mean, I think he's been extremely accurate, at least in what we're seeing in terms of Iran and what's happening in Japan. I mean, he was talking about a lot of this stuff, quite frankly, before anyone else even really had eyes on what was taking place in Iran or really forecasting that this was going to take place. And also in terms of Japan's interest rates and the reverse carry trade. Now, I think what gets super interesting, and I think you've just started to see it, is XRP being that liquidity tool as the bailout piece. Something extremely interesting that went very under the radar was SBI just filed to start actually issuing bonds directly on the XRP ledger. Now, I think that is a very, very early sign of some actual material evidence of them using the XRP ledger and XRP as a liquidity tool to essentially get themselves out of the situation they're in right now. Those are the kind of final pieces that I'm paying very close attention to in terms of XRP and the XRP ledger being integrated deeply enough into Japan for that to be a sort of way for them to start to back themselves out of this situation. Now, what I would really like to see is a lot of those narratives start to ramp up into more serious volumes and to start seeing more direct purchasing out of Japan for things like XRP and start seeing it heavily integrated as that financial product. Back in the day, there was that post from Yoshikaka, I'm not even going to try to say his name, the CEO of SBI, talking about the issuance or having XRP as a global banking asset in Japan. And I think he predicted 2025, pushed out a little bit. 2026, it looks like it's really starting to ramp in Japan in terms of more financial institutions plugging into the XRP ledger and having bond issuance on the ledger itself. It seems like to me, while some of these timelines have been delayed, they always are, it seems like a lot of it is coming together and a lot of these stories are really starting to materialize. And I think things are tracking really well right outside of timeline.
And the most important domino is the one that everybody's waiting for, right? Rapid price appreciation because it's being tapped as a liquidity solution. But I think this is something that again, I've always been skeptical about the timeline. I've never been skeptical about Jake's accuracy on the predictions that he's made thus far. So I always say we got to give credit where credit is due. And we did a video the other day, I think it was like a month ago at this point, where we went through Jake's domino theory, and he's hit almost every single prediction time and time again. Now there's a couple that are still out there, right? Collapse in Tether, maybe a BlackRock spot XRP ETF filing. But that's what I wanted to get into with Mikkel during today's episode, guys. We're 35 minutes into the show. We got about 10 minutes left in the program. If you're enjoying today's content, smash that like button, subscribe to the channel, and we're going to break down this latest update. This is from our friend Matt Hogan, Mikkel. I'm pretty sure you've already seen the video, most likely. What he announces in this short video is that BlackRock officially announced they're going to be tokenizing every single ETF product that they offer in the next 3 to 12 months. Here's a 20-second clip and we'll break it down.
The thing that really caught me was an interview with BlackRock's CFO, Martin Small, right? Not a household name, but obviously a BlackRock. And he said they plan to tokenize all of their ETFs in the next 3 to 12 months. The thing I'm not sure crypto gets is that for a large institution, when something is on a 3 to 12 month time frame, it's a fait accompli, right? At that point, you're dotting the I's and crossing the T's. It's not a project that may or may not happen. It's something that's going to happen.
And that's the important part, Mikkel, because again, what did I go to immediately? I started thinking about Larry Fink. He's talking about Bitcoin. He'll talk about Ethereum. He'll even reference Solana and meme coins on some occasions, unwilling to talk about XRP publicly or the company Ripple. You've heard Brad Garlinghouse say, and I think this was about a year and a half ago at this point, he was being interviewed on Bloomberg, and he's like, I know Larry Fink has said some things, but we think it makes sense for the XRP community overall. That's the exact quote that he uses. Well, this is what I think could be happening in the background. That's where I want to get your opinion. I think Matt Hogan just gave us some insight that BlackRock could be tokenizing or will be tokenizing all of their ETF products, not just crypto, stocks, bonds, gold, silver, everything will be tokenized and on a public blockchain. What if the reason that they haven't referenced Ripple or the XRP ledger is because that was always the end game for their products? It wasn't that they were going to launch a spot product. It was that they were going to tokenizing everything, leveraging the ledger. Floor.
Well, I think they'll have a spot product, quite frankly, regardless. I also think if you take a look at what they're doing in terms of their BIDL fund, it already ties directly to RLUSD. I think there's going to be heavy involvement there. I mean, if you just look at who's stacked on the BlackRock team, I mean, there's involvement both ways, from BlackRock on the Ripple side, from Ripple on the BlackRock side. I don't think it's any coincidence that there's certain things they won't talk about. They'll talk about it's everything, but then XRP comes up and suddenly like that to me, like, I don't discount that at all. For me, that is one answer and one answer only. And people can speculate on what that means. To me, it's fairly obvious. I think at the end of the day, you just need to take the very obvious thought process here that we were just talking earlier in the show about clarity. Is clarity going to happen? Well, you can hear right now that BlackRock absolutely is not lobbying or pushing clarity out because they don't have any reason for it, right? It's part of their structural roadmap that they are launching these crypto integrated products into what they are bringing to market here. There's absolutely no way that we don't come out of this situation with massive financial institutions that have never touched cryptocurrency before, now building products specifically on top of this industry, bringing in orders of magnitude of inflows that we've never seen before in history. And, you know, I just look at the current situation we're in terms of a sell-off right before all these things happen. And if we all look back at this, right, 5 to 10 years from now and say, could you believe there was a big sell-off in crypto right before institutional and global adoption of this asset class, right before BlackRock started tokenizing all their ETFs? Like, of course that was the case, right? Like, of course that's what happened. And I just think, as I talked about earlier in the show, these are the opportunities, right? They're giving you the playbook because of the internet, because of social media. We can see these glimpses of what's being created on the inside. We can pick up on these small things that we never would have noticed before. And all systems are pointing to, this isn't just some fad. This isn't just like, oh, the banking lobby to show up to talk once in a while, but they're not really interested in clarity. What we're seeing is a new rollout of new financial rails, and it goes all the way up to BlackRock. This is going to be implemented, and I don't think there is any possible way this doesn't have an astronomical impact on price over the next 5 to 10 years.
You make such a good point. When you think about it in retrospect, like, of course, there's a huge sell-off on these assets. Who do you think's buying the bottom? And it's funny because you look at CNBC and all these things, and the fear and greed index is lower than it was during COVID, lower than it was during the FTX collapse. But you look at prices, they don't necessarily reflect that. And I think a lot of people are going to be caught off guard by how quickly this market changes momentum. Once we get these big catalysts that me and you kind of been breaking down throughout today's episode, I just wanted to make sure not to miss this, guys. Big thank you to Dane A21 for the $20. Appreciate you, my friend. Appreciate my dogs keeping me on top of every single day. Good news or bad, the transparency is key for me. My friends and I believe we're looking at good news. P.S. Uncle Johnny, he has been working out. Big thank you to Dane. And a huge shout out to Mickle, guys. If you're part of the Mickle Mafia, shout out to you. Now, Mickle, shout out to you for your awesome new thumbnails, because again, the thumbnails are out of control, my man. They're awesome. Very, very cool. I'm not going to let you spoil those details of how you're creating those because I'm very interested because they're awesome. But guys, I do want to break down one more thing while we have Mickle here on air. If you're enjoying this content, throw your comments in chat. I'd love to ask Mickle some questions from the live chat as well. We just got big news. Swift is partnering with BNY Mellon to design a blockchain-based ledger for cross-border payments and tokenized assets. Well, my friend Joey Swoll, who I actually got to meet in Southern California a couple weeks ago, I walked outside of a coffee shop, totally random, Mickle. Walk outside of a coffee shop. Joey Swoll's just standing there. I'm on the phone. I go, is that Joey Swoll? So we ended up talking about XRP. We actually talked about you. We talked about Coach JV because he watches your content. He told me that. He watched a couple other people. Great guy. But he commented this. Yes, BNY Mellon and Ripple are connected through multiple partnerships and collaborations. And we know this, BNY Mellon, Ripple, the stablecoin, things of that nature. But it's just really interesting to see like Swift and Ripple always viewed as competitors. What if the end game is they tap into the same ledger, right? Who really knows? What are your thoughts on that?
I think when the more you start to understand how this is all being built out, the more it makes sense. There's only certain pieces of this that I want to get like into too much detail on, but you need to understand that Ripple really isn't trying to disrupt someone like a BNY Mellon, right? Ripple is the technology arm and the technology solution for someone like a BNY Mellon. And why is that the case? Well, BNY Mellon is going to be on top of that, the compliance and institutional layer for holding the licenses, right? And holding those regulatory compliant, the rules they have to follow that we talked about for what banks have to do earlier, why cryptocurrency companies just don't do it. It's the perfect combo. You have someone like a Ripple providing the technology underneath the banking platform. So the banking platform sticks to the compliance, builds out these trusted regulated product sets. Underneath that, Ripple's building the infrastructure. I think the more you start to really understand why these banking institutions are partnering with Ripple from a tech perspective and why Ripple isn't trying to create the product sets these banking institutions have already created, the more you can probably start to realize that the way these partnerships are built are going to be through Ripple being the tech arm of what these banks are doing. They're not recreating it. They're not building their own blockchains. They're not coming out with private or their new versions of the XRP ledger. I think the partnerships are because these banks don't have the tech solution. Ripple is that tech solution, and it all comes down to what is the most important piece of Ripple's tech stack. It's the XRP ledger. I think when you see partnerships like this, working with BNY Mellon, I don't think BNY Mellon is delivering the crypto side. I think Joey Swoll is exactly right. What is BNY Mellon's crypto arm? It's going to be the XRP ledger. And I think there's a strategic reason why Ripple is already plugged into so many banks. They are all looking for access to the same exact thing.
Well, in the end, we're going to win, Mickle. As long as this market survives, all of these assets will continue to appreciate in price. And I think the most ironic thing about today's episode was that we talked about the Ethereum free pass forever and nobody would listen. Now XRP is about to get its own quote unquote free pass. And Charles Hoskinson's going nuts. I'm sure we'll see other people going nuts on Twitter. There are 76% odds right now that the Clarity Act is signed into law in 2026, guys. I'd love to hear from you. One's in chat if you think Clarity Act is signed into law. Two's in chat if you think it does not get done. Mickle, any closing remarks for today? Just want to give you a huge thank you. Like always fun doing these episodes. We'd love to have you back, and you know that. Another thing, guys, I'm going to be joining Paul Barron tomorrow morning. So if you're looking forward to that, I will be on Paul's show Mikkel, they called me in to replace you. I don't know what's going on here now. And of course, I'm just kidding because you're on there like once a week. But big thank you again today for joining us. Any closing remarks for today? And I can't say thank you enough.
No, always appreciate coming on. It's always a blast. Love with you. I actually found out the last time I was on, I was the first guest on the show. It's so cool to see where the show has come. You guys are absolutely killing it. And I have to say, every single time you have like a big wig on the show, someone way bigger than me, I'm always sitting there smiling. I was like, damn, they're killing it. So congrats on all your guys' success. And, you know, I just can't wait until we come out of this current hectic, chaotic situation. We all get together on the other side like we always do and say, wow, you know, we weathered this storm together. And I think this show is one of those shows that brings people together and keeps people excited. So appreciate all you guys are doing, and always a pleasure to come on.
Appreciate it, Mikkel. Listen, history is forever. Nobody can ever be the first guest on GEC ever again. So shout out to Mikkel, guys. We do have nearly 4,000 people here. If you enjoyed today's content, smash that like button, subscribe to the channel, comment Mikkel underneath the video, and we'll see you all in the next one. So if you're looking to implement the same strategies that we do here on Good Evening Crypto, I would encourage all of our listeners to click on the Merlin link below and sign up for I Trust Capital as well. Now, why are our listeners going to do this? By leveraging the Merlin application, you can create a profit plan for yourself so you know exactly where you're going to be exiting this market. But leveraging iTrust through a Roth IRA product, you can take advantage of tax-free crypto gains during this crypto bull market. So I would encourage everybody, click on the link down below, sign up for iTrust today, and take advantage of our $100 free sign-up bonus.
Well, you don't know much about crypto. You know nothing about nothing. You fake news.
But the challenge, as you know well, is the U.S. has had this very hostile. The Biden administration has been waging a war on crypto, and I think an unlawful war. Courts have agreed with us on that. And we're finally seeing that kind of unlocked in a Trump embraced crypto, and crypto embraced Trump. And I think we're seeing that reflect in kind of how the markets have reacted since the election. So we want them to have a role. And as you know well, one of the biggest problems the crypto industry has had isn't the idea there's too much regulation. It's just the regulation is not even clear. We're trying to apply law